Jessica, at a high level, where do you start the charitable giving conversation with your clients?
So every client situation is unique, but I start with three main things: the goal, the asset, and where the asset should go. So first is the goal. Do they want to just wipe out their ordinary income with their charitable deduction, or do they mind or feel comfortable with eating into long-term capital gain income, which is taxed at a lower rate? The second is the asset. I usually recommend giving highly appreciated publicly traded stock held for more than 1 year. That's the most efficient asset to give. The next would be cash, which is less efficient, but given the makeup and the goal, we work with both of those assets to meet the client's charitable needs. Last is privately held assets, which have further complications and considerations to give away, but could be a good asset for giving. Then we move on to where do we want it to go, a donor advised fund or a private foundation, and between the asset makeup and those two things, which is the right place for it to be.
And are those more advanced strategies?
So for most families, keeping it simple and giving highly appreciated securities to a donor advised fund is enough. But in certain instances, we could use more sophisticated strategies like charitable lead trusts, which are very powerful. And simply put, it's an annuity stream to a charitable organization over a period of time, and with the appreciation of the asset going to the family. It's not something we would recommend across the board to every client, but with the right fact pattern, it could be a very effective complement to straightforward giving strategies.
And how are you advising clients in 2026 with regard to their lifetime gift and estate exemptions?
So there's no rush, but there could be a cost to waiting, right? Now, the exemption was made permanent and will be indexed with inflation annually. But, in a simple example, you could have an asset that will likely appreciate that if you don't give it away currently, you're using more exemption at a later date to give that same asset away that you could have given away today. Some clients also consider, am I giving too much away too quickly? Right? And then we look to other strategies like spousal lifetime access trusts, which can give the wealth away, but there could be a path to access via the spouse. It could be disadvantageous and, complex. So further consideration should be given there.
So as the great wealth transfer continues, and it's going to be another big year for the boomers to give it to the Xers or Yers or whoever they're going to give it to, how should tax play into this, and how should EY play into this? What do you do differently than other players do?
Well, I think tax should be a bigger part of the conversation, but not a sole driver to the strategy. So just a simple example is, what asset should I give away? Does it create an inherent future tax liability to my heirs if I gave it away now versus letting my estate pay the tax and giving a stepped up asset with basis? So those are things to consider. So there's a lot of factors. I mean, we're seeing lots of family offices and IRAs bringing in tax expertise and EY as being a part of the conversation, in order to discuss what those key factors are and how they integrate with the family goals, the philanthropic goals, and the estate planning goals.
And then finally, based on all the changes from 2025, what should we expect when it comes to tax planning and charitable giving in 2026? We got the whole year ahead of us.
Yeah. So, there were 2025 policy that took effect 1/1/2026. There are two main limitations by way of charitable giving and an overall itemized deduction limitation. Clients need to be more deliberate and strategic and do multi-year planning when it comes to their charitable giving. For example, it may be more beneficial to give $300 to charity today versus $100 over a course of 3 years. The strategy I like to call is charitable bunching, where you do that and maximize those deductions. And lastly, I think people just need to be more deliberate in what their giving strategies are, how much to give away, and when to give it away before the end of the year.
All right. Well, thanks a lot for coming on and talking about it.
Sounds good. Thank you.